So we're up to chapter 14. This is on long-term liabilities. And the two primary ones that we talk about in this course are long-term bonds payable and long-term notes payable. Mercifully, we do not cover pension liabilities and long-term leases. You'll just have to save that if you go on to a 4-year. Okay, so the thing to know about any long-term liabilities: why do we bother with them? Why would a company do them? Basically, it'll raise large amounts of long-term capital to work with. Maybe they need new plant facilities, they have pension obligations, all kinds of things to take care of. And so it's usually, they'll do a bond issue or a long-term notes payable to finance some long-term projects. The basic differences between our notes and our bonds: notes payable, we're all somewhat familiar with. We've done short-term notes payable. You've run into long-term a little bit. They're usually due to one creditor, to a bank, some other lender, a financial institution, or some body. So you'll have a note payable due to Citibank or to whoever. Bonds payable are a little different. They are sold to the investing public. And we say the company will do a bond issue. Well, the bond issue may be $10 million, but it may be in the form of $10,000 bonds that are sold to a bunch of different people. A bunch of different investors buy these bonds. So when we're talking about a bond issue, it might be $10,000 bonds times 1,000 people that bought them, and that gives you your $10 million bond issue. Okay, yeah, so most of us are pretty familiar with notes payable. You might have a car loan or a mortgage, something like that. But bonds, most of us don't have much experience with bonds. So in the section on bonds payable, there's a couple of articles in there or links to just show you what bonds are about. Basically, bonds can be issued by corporations. Those are called corporate bonds. These trade actively on the stock market, just like stocks would, investments in stocks. So corporations can issue bonds for various purposes, and I think there's an article there on why different companies are issuing bonds. Federal, state, and city governments can also issue bonds. You can have City of Miami bonds, or you can have Massachusetts green bonds. I have a link to that on Blackboard as well in the bonds payable section. The Commonwealth issued green bonds to fund, and I think the project is in Fall River or New Bedford, to get the infrastructure ready for offshore wind farms. Other government agencies can issue bonds, and these are, like the MBTA could hopefully issue some bonds to get some new trolley cars. Okay, so the first part of the chapter will be on the bonds payable, and then we'll move on to the notes payable.